This is Jonathan.
Hey, Jonathan, Dennis Tross, man. Sorry, I missed
Hey.
all your emails.
Yeah, no worries. No worries.
I'm on the road up in New York and literally just pulled into a parking space and connected. So, yeah, whatever you feel comfortable with. I think the lending presentation is great. I'll make you co-host so you can control the presentation if that works.
Yep.
And you can play it by ear. If you want to talk about CDFIs and small business lending, really anything you like. And it's kind of hard to tell whether there'll be a lot of questions or not. Sometimes there are and sometimes there isn't. So I think just whatever you feel comfortable with. And, if you present for 35, 40 minutes, that's plenty.
Okay. And the class is all entrepreneurs?
Yeah, all small businesses that are looking at going online, creating e-commerce sites, learning digital marketing, all that kind of stuff.
Okay, and how many of them?
Well, there's 20 signed up in the class. I never know how many will show up because of their work schedules, whatever, but I would expect probably 10 to 12 of them will be there.
Okay, sounds good. All right, yeah, the more interactive it is, the more interesting it is for me too. So I'll try to generate that if I can.
Yeah, it's really funny. Sometimes they're like wide awake and really engaged, and other times, I have to ask all the questions. So
Yeah, no, I understand. I was in the class once too.
I was in the back asleep. That was me.
Yeah, exactly. Yeah, me too.
All right. Well, thanks,
or
Jonathan.
reading some other book that had nothing to do with the class.
Yeah, exactly. And trying to get notes from the pretty girls, that was always my goal.
Right. Yeah.
All right, man.
All right.
See you in a
Well,
bit.
sounds good.
Okay.
Yep.
Bye. Hey Doug, how are you? Hey, Rachel, how are you?
Hello.
Hey, how you doing?
Good. How are you?
I'm good. How's your other accelerator going?
Oh, it's going really well. We got some really good
Good.
information.
Fantastic. I need to sign up for that.
Yeah, it's really interesting because our other business, the message is not clear enough. So they're helping us to focus because we do like 20 different things, but we need to have a clear pathway.
Yeah,
And it's helping.
well, that's good. Yeah, that is, you when you're in the barrel figuring everything out, it's hard to realize that external people might be perceiving something else totally.
Right. I'm not seeing you today.
Yeah, I'm in a place where I can't use the video, unfortunately. I'm actually up in New York as it so happens.
Oh, okay.
Nice.
So
What
yeah.
part?
Hudson Valley.
Okay.
Yeah.
Dan's from New York.
Yeah, actually Hudson, New York. I've never been there before, so it's kind of interesting. Neat place. Very, very Hudson is an interesting place. It's got a really long main street, and I found out the reason the main street is so long is because they made whaling ropes there, and they had to stretch the rope out really long to make it. So there's these two alleys that parallel the main drag, and that's where they stretch the ropes out. So
Oh, that's wild.
yeah, I think Jonathan is here. Hey, Jonathan, how are you?
I am. Hello.
All
How's
right,
everybody?
Hey, Jonathan.
good. Oh, we can see you. All right.
Yeah, I've got some rural internet issues, so I may have to turn off my camera at times, but
Yeah.
great to be here.
Well, I have a face for radio, so I can relate totally. So, okay. Well, we'll just give it another second or two. And I think, unfortunately, Grant is not here today, so I'm going to have to be paying attention to who shows up and letting them in. So hopefully I'll succeed at that. I've never done one of these on my phone before, so this is going to be interesting. All right. So, okay, let me see what I'm doing here. Okay, so let me, sorry about
It looks
this,
like I
folks.
can.
Yeah, you have the controls, hopefully.
Yeah, so I can let people in too. Yeah.
Oh, good. Okay.
I don't know names, so if we get Zoom bombed or whatever they call it.
Yeah.
Yeah.
I'll be able to do it. I'm only semi-retarded. Oh, we're not supposed to say that. I'm only semi-challenged, not completely. So, all right. So I'm going to introduce my my friend and really a rising star in the North Carolina business scene. Jonathan Brereton is the I don't know what his title is. I call him the CEO of Thread Capital. Thread Capital is a subsidiary of the North Carolina Rural Center, which some of you may be familiar with. And he's really doing some good things, bringing access to capital to smaller companies in rural areas. And he has other things that he'll be talking about. So let me turn it over to Jonathan.
Great, thank you.
Let me please mute yourself, whoever that is talking. Thank you.
All right, so I'm going to share my screen here.
Oh, great.
Can you all see that?
Yeah.
All right.
Cool.
So I've got a presentation that I was thinking I would walk through. Please interrupt me at any time with any question about anything. I'm happy to make up answers, but for the most part, I'll try to stick to things I actually know.
Okay.
I learned that the hard way from my wife. So my thinking here is that I'll walk through kind of who Thread Capital is, what we do on a regular basis. Then spend a little bit of time just talking about the difference between debt and equity and kind of where we find ourselves at the moment. Because business financing is in a very strange place right now for a whole host of reasons. And then there's a section of this, if everybody thinks it would be helpful, where it's essentially what a lender thinks about when you talk to them. So what are the things they're looking at and trying to gauge? So I'll walk us through this, and if I'm going too fast, tell me to slow down. If I'm going too slow, tell me to speed up. Ask questions, whatever is helpful to you. I don't love to hear myself talk, so the more interactive this is, the better it will be, for me at least. Okay, so I'm Jonathan. As Dennis said, I'm Thread Capital, which I run, is a CDFI. So we are hold on, let me see if I can get the slideshow. Start the slideshow. All right, can you see that now?
Yes.
Is it just the big screen?
Yes.
All right, perfect. Okay, so Thread Capital is a nonprofit organization. We're a subsidiary of the North Carolina Rural Center. We launched in June of 2018. Like Dennis, I'm a transplant, so I came here 3 years ago after about 20 years in Chicago. To all the native-born folks, I apologize that we're invading the state. I married a woman from Raleigh, and it was in our prenup that when the children got to school age, we were going to come to North Carolina. So here we are. So Thread is a community development financial institution. And what that means, that's a certification that we get from the U.S. Department of Treasury. And to get that certification, we have to commit that 60% of the loans we do will be to either low-income individuals, entrepreneurs of color, or in low-income census tracts. So Thread does that consistently, and so we have that certification. We're based in Raleigh. We serve all 100 counties. Honestly, at this point, we're based in everybody's houses, which are spread all over, and that's likely to be a kind of how we operate for quite a while here. We have 7 full-time staff, and over the last 3 years, we've worked with thousands of businesses, lending more than $60 million to more than 1,000 different entrepreneurs. When we launched in 2018, we had, I think, we wanted to grow 5x over 5 years. So we had, I think, for me, reasonable growth expectations. We ended up growing about 20x in 2 years, largely as a result of the pandemic and the impact that that had on entrepreneurs. Here's the team, just so you get a sense of us. Again, there's just 7 of us at this point. We've got 3 more positions that we're filling soon. And I don't ever want to have more than 10 people on the team. So the more people you have, the more HR problems you have. And I don't love doing HR stuff. So why do we exist? Ultimately, we want to make sure that everyone in North Carolina has access to the resources they need to be successful as an entrepreneur. And we recognize that there are a lot of systemic issues, historical issues that do not currently give everyone equal access and equal opportunity. So that is really what drives us, is trying to make sure that everyone has access to the resource they need. Where those lines are, essentially where the gaps are, expand and contract depending on any number of circumstances. Obviously, in the pandemic, that it contracted greatly with banks lending their own money. It expanded significantly with the government putting in PPP dollars and EIDL loans. And here in North Carolina, the Rapid Recovery Program, which we did coming out of the pandemic. I think there's a big question of what's going to happen and where the dollars will come from to lend, given the impact that it had on a lot of people's P&Ls in 2020. But same in the aftermath of a hurricane, the gap where access to financing is expands in the aftermath of a hurricane. But ultimately, we believe that getting underserved entrepreneurs access to capital, coaching, and connections is really what will help them maximize their potential. So who are our clients? Our non-disaster loans, 63% year to date are rural, 82% people of color, 94% women owned. And there's some very happy people.
Yeah.
So as I mentioned, capital, coaching, and connections are the three services that we provide, and I'll go into those in a little more detail here. So on the capital side, small business loans, which are kind of our bread and butter, and then disaster recovery loans. Pre-pandemic, we thought that was only hurricanes and natural disasters. None of us saw the pandemic coming, but that really, we basically treated the pandemic like a big, long hurricane in how we thought about it from the lending side. So we used our hurricane products to lend to businesses in the pandemic. So coaching, this is ultimately, we want to help make sure that any entrepreneur that comes to us doesn't make a mistake that we've seen another entrepreneur make. So this is just giving feedback, giving guidance based on what we see in business plans, your marketing strategies, credit issues that we might see, bookkeeping issues, taxes. We're not experts on any of those things, but we see a ton of business plans and a ton of, as I said, we've worked with thousands of businesses. So we see in most industries and sectors, we've seen successful businesses in those sectors and unsuccessful. So we have a pretty significant range of resource to draw on there. Doug has raised his hand. I don't know if I need to do anything. No. Okay.
Just so do businesses have like their own credit score?
Good question. There is a business credit score. There's a couple different similar to personal credit, and we'll talk about personal credit. I'm happy to kind of cover that in a little more detail. There are different credit bureaus for business credit and personal credit. Banks will typically report into a big database of business lease agreements, loan agreements, that type of stuff. And then there are people that will consolidate that data and create a score around it. In my experience, business credit scores are, the data is not anywhere near as clean as it is on the personal side. So for the most part, if you look at a personal credit report, it's probably 80% right. There might be some stuff in there that shouldn't be, there might be some things missing. I would guess on the business credit side, it's going to be, you're gonna have a much lower hit rate. So lenders typically will trust a business credit report less than they will a personal credit report.
Interesting. Very interesting.
I had a question about your coaching. We're in the program because we're wanting to start a commercial kitchen. It's going to be a multi-purpose. It'll offer space for new entrepreneurs, new businesses that are starting food or beauty and need access to commercial equipment. We're also wanting to be a jobs incubator so that as they grow, they don't have to take on the burden of hiring full-time staff. We will be able to provide staffing for them, trained staffing, qualified staffing, until they're able to hire full-time. And then we also want to look at ghost and virtual kitchens. So this is all pre-revenue. We're just in the planning stages. As far as your coaching, do you offer business plan templates or examples of similar businesses? Because that's, I guess, the next logical step.
Each one of our clients in themselves are going to require coaching.
Sure. Yeah. So I have a very interesting direct parallel, I think, to what you're trying to do. When I was in Chicago, we launched a big, huge, covers about a city block. It's called the Hatchery Chicago, which is a big nonprofit incubator. We built out 60 commercial kitchens. So I would be happy to talk in a lot more detail about what we did there and how we did it and connect you to the people there.
That's fantastic. My sister just moved from Chicago area. She was in Schaumburg.
Okay. All right. Very cool. Yeah. So, I mean, that was a $36 million project that took us quite a while to put together, but I'm happy to share all of that. I don't know if I can give you the business plan, but maybe I can. I don't know. We'll figure it out. But let's make time afterwards or one-on-one, and happy to go into that in more detail. I think to the question specifically about business plans, this is my opinion only. You'll get different opinions from different people, and I hope I'm not countering what Dennis tells you. A business plan is, I think it's helpful when you're trying to kind of flesh out what you're doing and what you're not doing. Once you get going, I like the Mike Tyson quote of everybody has a game plan until they get punched in the face. Once you get going, things change. You deal with realities that hit you. And in my experience, the difference between success and failure for a business is often what they do when things go wrong, because they're bound to go wrong. So I don't put a ton of stock as a lender. I don't put a ton of stock in business. But I think they're certainly helpful. When I've started a couple of businesses, I've written a plan just to make sure I know what I'm doing and what I'm not doing and where I'm not going to go. I think that's as much of importance as anything. So as far as the business plan, back to your question. We have a template that I could give you that is a lender's business plan template, essentially. It's like 2 pages. Who are you going to sell to? What are you going to charge them? What are your costs? What are your materials? How much do they cost? Where are you going to get them? It's just very, very simple. Happy to give you that. There's a lot of much more detailed business plan templates out there. But that's all we really use on our end.
Yeah, Jonathan, if there's any material you want to share, you can email to me and I'll post it on our Slack channel for everyone to access.
Sounds good. Did that answer your question, Rachel?
I didn't get
It
that.
did.
Try again.
Working on a business plan has always been a pause point for us. We have another business and everyone's always asking, where's your business plan? So if it's required and we have to do it, we'll absolutely do it. So I was happy to hear it's only 2 pages. That's definitely right in my wheelhouse, 2 pages.
Yeah. Yeah, I think at some point they become more effort than they're worth. But I think if you're getting into a new business and you don't know it very well and you need to do a lot of research, then it's a different scenario. But we make loans to a lot of people that have been driving a truck for 20 years and they're just going to go out on their own and buy their own truck. We don't need a real detailed plan. We have a couple questions, but we don't need a 20-page business plan. All right. Next is the connection. So on this front, the image I have of what we're trying to do, my uncle started a business and was very successful with it. He then invested in both my brother's businesses and connected them to his networks. Isolation is one of the biggest things that entrepreneurs, in my experience, face. And the more we can reduce that isolation and connect them to networks, whether it's financial networks, suppliers, customers, the more we can reduce the isolation of entrepreneurs, the better. So we are going to make a hire at Thread in the next 2 weeks, for a coaching and connections manager, who will work very hard to make sure we reduce the isolation of all the entrepreneurs we work with. We're fortunate to be part of the Rural Center, which has a 30+ year network that they've built across the state. And we are hopeful that we'll be able to tap that network to provide those resources to the entrepreneurs.
I had a question about the Connections Network. Is this something that's only geared towards people that you lend to, or is this open to all small business owners that are interested in developing their networks?
Yeah, at the moment it's piecemeal. So this is what we're hiring somebody that's going to manage this effectively. What is an unknown question is the volume that we'll be able to process of entrepreneurs. So we may start first with our loan customers and then expand it more broadly. I can't tell you exactly how we'll do it. At the moment, it's when somebody comes in our doors, we try and help them. I know that will continue to be the case, but we're really trying here to do what we're calling high value connections. So this isn't just like, oh, my uncle lives in your town and maybe he can come buy your hamburgers. It's like this person needs somebody that this person runs the local bank. They have 12 branches and they need somebody to mow their lawns. It's really high value connections, depending on the circumstances. In your case, it might be somebody that a big food business that's interested in innovation. So we're really trying to target high value connections. And the scale of those is still an open question.
Thank you.
Yep. All right, so a little background on kind of where we find ourselves and where Thread fits specifically. So I don't know if anybody else has covered this with you. This might be something everybody already fully understands, but Thread is ultimately offering debt products, not equity. And for a debt product, typically the lender is looking for a highly predictable business with low odds of failure and very carefully mitigated risk. So they're not expecting to take losses. They want collateral. They're going to price it based on the risk, et cetera. But it's not, for them, it's not a high risk venture. Equity, longer odds of success, greater risk and greater opportunity for reward. So that's depending on your business, depending on where you are in the life cycle of your business. Sometimes people are looking for debt and we tell them, really, you need equity. This isn't a debt moment. Sometimes people are looking for equity and debt might be a better option. So we try to help people make those decisions as well. Both of those at times, depending on circumstances, are the availability is a struggle, which I don't have to tell all of you, I'm sure you know. The other thing at the moment, there has been a significant emergence post-Great Recession. So after 2008 of fintech lenders, some of which are good and some of which are bad. So banks have really pulled back their lending to businesses with under $1 million in revenue since 2008. This is only going to get worse in the next 12 to 18 months, I'm sure. There, in that gap that was created, there emerged a bunch of lenders that will make promises of quick money. I can get you money tomorrow. I can get you money in 2 days. That are not transparent in how they make those credit decisions, not transparent in what the pricing is on those. But if I can leave you with anything, I think fast money is generally not good. To make a good credit decision, you need to look at the entirety of the circumstance. You have to look at tax returns and bank statements and credit reports. Typically, if they're making a very fast decision, it's probably not a real good decision. And it's not based on your ability to actually repay. So it's not based on the net income of your business. It's probably based on the top line revenues. And then they're just going to leave it to you to manage. So just be careful. At the same time, I recognize some lenders, what I'm calling traditional lenders here, can take forever to make a decision. That's not okay either. So start the financing process before you need it, because if you do it at the last minute, you're going to potentially be up against a wall. And if you make the wrong decision, it can totally sink your business. We've seen that consistently, where a business gets in real trouble because they took some of that financing. And the interest rates on those, I've seen them anywhere from 40% to, I saw one at 350%. So the rates can be very, very high. So I mentioned this last point here. Post 2008, banks really contracted their lending, and they did this for a very rational reason. They weren't making money on the smallest small business loan, so the margins were tight. They lost a lot of money when the Great Recession hit. So they largely exited lending to businesses with under $1 million unless they could do them as credit cards. What has happened, or what we anticipate happening in the next 12 to 18 months, banks make decisions based on the profitability of your tax returns. A lot of businesses are going to show losses on their 2020 tax returns. And as a result, banks are likely to only further contract in the next 12 to 18 months. So financing, I would expect, unless there continues to be a lot of government stimulus, I would expect financing through traditional channels with traditional capital to be hard to come by in the next 12 to 18. So I'd plan accordingly. Why don't I pause there? Because the next section I have is just going into kind of what a lender's typically thinking about, what questions they're going to be, kind of where their head is at any given time. Any thoughts, questions on what we've covered so far?
Jonathan, can you comment a little bit about average dollar amount of loans and maximum or ceilings on loans?
Sure. So, and I'll do this in the context of the banks that I was just talking about. Banks, essentially, if a loan is under $250,000, most banks don't want it because they can't make enough money on it. So it takes just as long for a bank to underwrite a $100,000 loan as it does a $5 million loan. So their costs are basically the same. And they, for the most part, under 250,000, they're not really going to be interested. Certainly when you get under $100,000, and the data is very clear, specifically female entrepreneurs and entrepreneurs of color are more often than not looking for amounts under $100,000, which is inherently where banks don't want to operate. So there's big gaps just based on size and just based on what they can do profitably and not do. But ultimately, you can get SBA loans. Small business loans can go up 5 million and greater.
What's the limit for someone like Thread Capital or a typical CDFI? What would be a rational limit?
Yeah, so there's two different, the way I think of it, two different tiers of CDFIs. Thread is at the very bottom end of the market. So our average loan size is about $10,000, our average typical small business loan. We stop right now at 50,000. We'll probably push that up to 100,000, but unlikely to go above that. There are other CDFIs that are more interested in the 50 to 250. So between ourselves and some of our peer CDFIs in North Carolina, we're covering the full gamut. CFIs struggle with some of the same cost realities that banks do. So the smaller the loan, the less profitable it is for us. And we go out and fundraise every year to offset those costs, to make sure we're not passing all of the costs back to the entrepreneur.
Okay, I think someone else I interrupted rudely had a question.
I actually had a question as well. Dennis touched on part of that question you answered with those loan size. What are some of the parameters? Because I've recently, in the past 2 years, attempted to get loans with my other business. I have good credit. I did have cash in the bank, but I don't have collateral. And I have a positive revenue. I don't pull out much money from my business because I'm trying to grow it. And most recently, the reason for being declined was that it was non-collateral based loan, but they said that, the grantee or the promisor, I'm not sure the correct term. They said that my income was insufficient to guarantee the loan could be repaid. And no amount of conversation or discussion would clarify that half of the revenue that I make with my other business is actually being put back into the company to grow it. I could take out more money, but that's just not going to help me grow, which doesn't make sense as a business owner to draw out funds early. So what are your parameters and how do you help new businesses that maybe don't have the funds, or someone who's renting but wants to start a business and they don't have the collateral? Do you help people in that situation?
Yes, absolutely. And let me talk a little bit about what I think you ran into with the bank there. Banks typically want 3 repayment sources. So they do not want to make a loan based just on your business being successful. They want to know that if the business fails, they can go after your house. And if they can't go after your house, that you have a high net worth and you can pay it off. So that goes back to debt. They don't want to take a lot of risk. And if they view their entire repayment sources, your business being successful, they're scared. And banks are, I tease the bankers I know that they're like robots. They all think the same way. They've all gone through the same training programs and they have real risk issues. But so this is what leads to there being a gap in the market, right? So Thread specifically, we look at your credit and we look at your collateral, but not to make a decision based on it. We make a decision. We have one repayment source, which is your cash flow. And we look at your global cash flow, which is your personal and your business. We mash it all together and we say, is more cash coming in than going out? And is there enough extra to repay our loan? And then we're going to look at how sustainable, how long has your business been generating positive cash? What do we think is going to happen going forward? But that is why an organization like Thread exists, to especially when you look at the lower end of the market. We're making loans to people typically, unlike yourself, that have damage credit because they didn't have a lot of money before and they had a health problem or went through a divorce or something and their credit got damaged. We care about what your credit is today. Are you current on all your bills today? We care about collateral because assets can be turned into cash to help support the business, not because we're going to come take your assets, but it's a piece of your ability to survive shocks to the business, right? So that's how we tend to think about those two. But we think about it very differently. We have one source of repayment. Banks want 3. And we don't want your collateral. We want cash. We need to know that there's enough cash to repay them. I hope that helps.
And how does that apply to new businesses that maybe don't have any revenue generated? Because I think you started off discussing new businesses.
Yep. Yeah. So a new business, we're going to look at your outside on that front. We're going to look at the personal side. So do you have savings that you can put in? We'll amortize savings over to help cover losses. Do you have an outside job? Do you have a co-borrower that has an outside job? And we'll look at your fixed expenses for the business. So the marginal expenses, we'll assume that if the business fails, you're not going to have to keep buying supplies for the business, but you may still have to keep making the rent payments. So we'll look at the fixed cost plus the global cash flow plus savings, and then we'll make a judgment based on that. That's Thread itself. Different lenders think about these things differently. I think definitely startups are tough, and there's a lot of CDFIs even that don't do startups. But Thread happily does them. About 40% of what we do are startups.
Okay, thank you.
And honestly, they perform just as well as our existing business. So that's not a anyway.
It helps to be successful when you can afford to pay the bills to focus on growth. So.
Yep.
Yeah, ideally. Well, I think it's wonderful that this category even exists, right? I remember when I started business, I'm really old, and the way that worked is the banker had to know your father or equivalent when you walk in there at age 21 with no credit, no money, whatever. And once they figured out who you were, then they may or may not give you a loan. Of course, in my case, they did, because I also was a good talker, even though I actually didn't have a father, as it turned out at that point. Anyway, a story for a different day. Sorry about that.
Yeah, and there's still, I mean, there are parts of the world where that's still how it plays out. Where your father has a lot of cash in the bank, so they'll lend you money because they want to keep your father happy and not have him move his accounts.
Yeah,
So
exactly.
it's these things, unfortunately, these things are a lot easier for some people than other people.
Yeah. Okay. Any other thoughts or questions for Jonathan?
Would it be helpful if I go into the how to think like a lender?
Please.
Would that be useful?
Yeah.
All right. Okay. So these are the things that lenders care about. You'll typically hear, I guess I don't know if you hear it from the customer side, but this is lender speak. Depending on how many, they have different numbers of C's. So some of them will say they have 4 C's, some have 5 C's, some have 6. One of our Thread employees was on a panel with a bank, and she said 6, and the bank said, "We only have 5. What's your 6th?" And our 6th was character, and they said, "Oh, we don't worry about that." But for Thread, character is very important. So credit, do you have a history of repaying your bills? So this is for them. This is for a bank. I think for Thread, this is 2 different things. It is your character, but it's also your history. So if you don't have money, you're going to have bad credit because you can't afford to pay your bills. If you have money and you have bad credit, that's a character problem because you're choosing not to repay your bills. So we think about those things very different. I think the way a bank typically will look at this, they don't really care what the story is. I always tell this story. My wife, when we were dating, I don't even want to calculate how much money this cost me, but when we were dating, she was sorting my mail for me, which I didn't realize she was doing. And I had bought a pair of pants on a card, on a Gap card. I don't know if Gap stores still exist, but there was a Gap store. I bought a pair of pants. They were like $30 pants. I put it on this card. I never saw the bill for it because my wife was putting them in a mail slot I didn't know I had. And when I ran my credit to buy my first condo, I had a 120-day late $30 bill from Gap, which knocked my credit score down 100 points and meant that I needed PMI insurance on my mortgage, which increased the cost like $200 a month for the next, I think it was probably about 8 years. So because of this $30 bill, I mean, we can do the math. I'm not going to do the math because I don't want to know. I ended up paying a lot more money. The bank didn't care that it was $30 and all my other bills were paid, and they just cared that my score was 100 points lower, which is incredibly frustrating. Had nothing to do with character. It was a stupid little thing, but they didn't care. So on collateral, then, this is to your question, Rachel, the reason they care. This is how else can they get repaid? So this is for them, what's another way to liquidate something to get their money back. For Thread, we also think about collateral as skin in the game. So we typically want people to pledge whatever they have because we want to know that they're all in on this business. If somebody comes to us and says, "I want you to give me $50,000 and I do have this asset, but you can't take a lien on it," that doesn't feel like we're entering this with equal share of risk. So we typically want whatever they have for skin in the game, not so much as a repayment source. Cash flow, what cash is available to service the new obligation? So making sure that they can continue to, I mean, that one's fairly straightforward. capacity is just, are you the right person to be doing this? Do you have the resources? Do you have the know-how to do it? Some of that is an experience question. Some of it can be just circumstances, industry, et cetera. Conditions, what's the market like? This is both an industry, they'll look at industry, they'll look at region, they'll look at the broader economy. Is now the right time to start this business in this community? Those are, especially at a moment like this where we're all going through so much change, that is going to be a very big consideration for most lenders. And then character is, how has this person responded to challenges? Back to the Mike Tyson quote. Do they show that they're tough when they push through when it gets difficult? And what is our sense of the honesty and character of the person? So this stuff we've talked about a little bit. I'll just highlight this last point here. When I talk about global cash flow, what I'm talking about is the business income minus the business expenses. In the case of Thread, it's the fixed business expenses typically that we're worried about, plus the personal income minus the personal expenses. That gives us a global cash flow number, and that's what we're going to make a decision based on. That all makes sense?
Yeah. Okay.
All right. And for us to do our calculations on your cash flow, we're going to look at your tax returns and your bank statements. That's going to be very typical of how most lenders are going to make these judgments, is based on those two things. Tax returns are best, and because we figure you're not going to overstate your income to the IRS. So that is always
good one.
that is always going to be a conservative look at how your business is performing. One thing I always try to say when I'm talking to business owners, if you shortchange the IRS, that potentially will impact your ability to borrow money. So most lenders care about the profitability of your business based on your tax returns. And that's how they're going to decide whether you can afford to repay them. So I one time had a guy say, do you want my real tax returns or the ones I give the IRS? And I said, that's tax fraud. So just give me the ones that you give to the IRS. So just keep that in mind. You can try and cut corners here and there, but it could come back to bite you. So I definitely don't recommend it. Bank statements, again, another place where lenders can feel confident that it's real data. That's real money that's going in and out of your bank accounts. When you give somebody your internal P&L, it's not really worth a lot to a lender because it's not verifiable. That makes sense?
Yeah. Well, Jonathan, so many things are now done online. Is that a problem? Getting stuff kind of official, like instead of from somebody's QuickBooks, let's say?
Sorry, being invaded by a child. So what's in your QuickBooks, we're not going to give you a ton of, like, that's your internal financials that we're not going to put a ton of weight behind there. But to your point, there are a lot of different ways that you can verify things now. So maybe it's PayPal, maybe it's some other Square or some other place where you might be processing things that we can verify.
Yeah.
But ultimately it's verifiable third-party data that we're going to really be looking to.
Okay. Very cool.
But for a bank, it's going to be tax returns. And that goes back to them not wanting to do startups. They want to see 2 years, typically 2 years of profitability on tax returns before they're really going to get interested.
Okay. Well, I guess maybe related question. What's the typical term of one of your business loans? Is it 5 years, 3 years, 12 months?
Yeah, our typical term is about 3 years. Most of our borrowers prepay, so they end up paying in 24 months typically. We tie the purpose, and this again is something to really be careful of. with what I consider some of the predatory products out there. We're going to tie the purpose of the loan to the term of the loan. So if you're trying to buy a piece of equipment, you should typically be borrowing money over the useful life of that equipment. So if its useful life is 8 years, you should try and borrow money. You should amortize it probably over 8 years. If you can afford to do it faster, good. But a lot of these other products, it's very short-term money, sometimes daily payments, sometimes weekly payments. And if you're using it to invest in your business for a piece of equipment or something, it's very, very difficult for the margins of that new piece of equipment to deliver sufficient returns to cover the cost of that capital. So if you're using the money for inventory, working capital, then it might be a 12-month term that makes sense. So typically if it's inventory or working capital, we're going to go 12, no more than 24 months. If it's equipment, we'll go longer. If it's leasehold improvements, we'll typically go to the length of the lease. But we're really going to tie the term of the financing to the purpose of the capital.
Also, is there a difference between a term loan and a revolving credit line or something like that?
Yeah, so a revolving credit line, I think, makes a lot of sense if you're able to get it for working capital needs. Do not put equipment and things like that onto a revolving loan. I definitely would not recommend doing that. A term loan is all that Thread offers, is term loan.
Okay. Okay.
And that's going to be true of most CDFIs. And I think a bank, you've got to be a pretty good sized business before they're going to want to give you a revolving loan. But they would probably give you a credit card if they can, they can process it very quickly.
Cool.
All right, credit. I mentioned we'd touch on this a little bit. I think you all understand this, but your personal credit definitely impacts your ability to borrow. In our case, we want to hear the story behind the credit. If the credit isn't perfect, so why do you have this slow pay? What was the story? Our average credit score at Thread is at least 100 points below where a bank's minimum credit score. So we very consistently are making loans to people with damage. But we want to see that you're current on all your bills today. If you're already behind, then it's hard for us to lend money. But if you have past credit problems, we're not really going to hold that against you. If you have a bankruptcy because a prior business failed, we're definitely not going to hold that against you, because that's kind of what we do. We want you to keep going. Collateral.
Love that. That's really cool. I'm a fan of that.
I actually made a loan to somebody that dumped us in a previous bankruptcy from a previous business. And they came back. We had charged off their last loan. They came back, and that one was a little difficult, but we did it because that's what we do. So, yeah, collateral is pretty straightforward. I think you understand. Here's just a bank or a lender like Thread is going to file a UCC statement to confirm that they have a lien on your assets. If you're doing factoring or something like that, they'll also want to file a UCC, and sometimes you need to ask a lender to subordinate their UCC. In the case of Thread, we will do that quite often. Others will potentially not be willing to do that, and that creates another level of complexity. Collateral, again, relatively straightforward. Asset has a value. You have a lien on it or you don't. You have a net value. Banks are going to discount the value of your collateral off what you think it's worth based on their ability to liquidate it. So they're going to basically calculate what the liquidation value would be. They take your house, they want to turn around and sell it immediately. They don't want to own a house. So they'll take a discount on the price in order to move it quickly. And that's the value that they're going to use to calculate your the value of your collateral. So capacity, this again, just are you the right person at this time to be starting this business? And I think this is as important for you to think about as for the lender to be thinking about. And if you don't have the right capacity to be doing this at this time, how can you get it? So I don't tend to think of this as this should not be a kind of a red line necessarily, but it should be very much an indicator of what you will need to be successful. And sometimes one of the things we need to be successful is to put the right people around us and that we can get guidance from. So capacity is certainly, for Thread, it's very important. If you've been in the restaurant industry for 20 years and you want to get into construction, we're going to look, we're going to be a little skeptical on that front and want to make sure that you have people around you that know construction.
We're exactly going the opposite direction. Our other business is pre-construction.
All right. So if you came in our doors, we would be saying, why food, why you? Explain this to us, explain, because we'll trust that you know how to run the construction business because we can see it. This is an entirely new business and it does not necessarily translate. Pieces of it translate, pieces of it do not. Capacity, so a business plan, as we talked about, and then your resume are important for us when we're looking at making a decision. But again, the business plan, we don't need any. We need to know that you know the business really well. We don't need a 20-page paper about it because we're probably not going to read it, to be honest. And then conditions. This is a place where I think right now there's just, the market is very odd. I've been doing this for 20 plus years. The last year we saw, I expected our portfolio to just totally go into the dumps when last March. I assumed we would end up charging off 40% of our portfolio. There's been so much stimulus, so the PPP loans and everything else, that honestly our portfolios performed quite well. I am worried about what comes after all that stimulus, especially since the availability of new credit is going to be constricted. So just be aware of kind of what you're doing. You want to start a commercial kitchen. What is the market around you? How many people are there that are potential tenants? All those questions become really important.
We actually gained interest in this. We love the idea of helping people and feeding people, and we had the opportunity to work with a large church organization with their food distribution. And our background is strongly in programming and app development. And we saw the challenges that they face in distributing food, and not only just the food, but the culturally sensitive food and health sensitive foods. So that, and I used to waitress many years ago. So, very long time ago, but just the desire to help others grow their businesses. We see the struggles, just the basic struggles, accounting, bookkeeping, access to equipment. If there's ways that we can develop a program that'll help people reach their goals without having to outlay their entire life savings to try an idea, because it may or may not work, but they won't know until they try it. And so dealing with this church organization, it showed us a really interesting opening in the market, we feel right now. And we would be very interested in learning how to properly research this and make sure that the need that we see exists so that we can try to fill that need.
Yeah. I'll look forward to having a conversation offline. Because we were thinking about all those same things at the project in Chicago.
Okay, just got a couple more minutes, Jonathan.
Character, again, relatively straightforward. Just know every time you're having an interaction with a lender, they're gauging you as a person. So I often tell our lenders, if somebody yells at you when they're applying for the loan, they're probably not somebody you want to be doing collection calls to later. So just know that all your interactions with people is the same as you're going on a date. I mean, people are reading a lot into a little bit of information, so just be aware of that. So here's some details on our loan product, our typical loan product. We have disaster products that are different. So up to 20,000 of less than a year of revenue, up to 50,000 of more than a year of revenue. Again, those numbers will probably change sometime in the next 3 to 4 months. But we are highly unlikely to go above 100,000. If your needs are above 100,000, we can get you to people that we think. If your needs are above 100,000 and we think they will lend you the money, we will happily pass you. Sometimes the needs and what you would qualify for don't line up, but that's a conversation we'll have with you too. I think one of the things that Thread really thinks is important is to help you better understand what the lender's thinking, so you can best position yourself when you walk into a bank, to a CDFI, et cetera, to put your best foot forward. And so to take some of the mystery out of it. I know if it's plumbing or something like that, I just take the plumber's word for it because I have no idea. The more you understand how a lender works and thinks, the better you'll be able to interact and make sure that you don't get taken advantage of. This is just a quote talking about how wonderful Thread is. Any questions at this point? I guess we're basically here at the end, so happy to answer anything.
Yeah. I have a question. Have you ever worked with a digital radio station or anyone like in the music business?
Have worked with some people in the music business, yes. Not a digital radio station that I'm aware of. We try to be relatively agnostic about what the industry is. So we're going to think about it in the same way we just talked about. So cash flow and your experience and your expertise. We don't claim to be experts on any specific sector. We want to make loans to people that are experts in that sector.
Got you.
All right. Well, I'm going to bring it to a close here. Thank you, Jonathan. It was really, really wonderful. And I'll post this contact information in our Slack channel in case anybody wants to reach out to Jonathan. And so go ahead, somebody. Yeah.
One quick thing. My direct email is just Jonathan@threadcap.
Okay, fantastic.
Please, Rachel, please reach out. Anybody else that has any questions, please reach out as well.
Thank you, Jonathan. We're very pleased with the information you shared, and hopefully we'll all be smarter when it comes to considering different ways to finance our small business. So thank you very much for the information.
Of course.
All right, I have one other thing. I got one other thing for everybody. Tonight, please tune in to our first live streaming e-commerce show with Booze Dogs tonight at 8:30 on Facebook Live on Booze Dogs Facebook page. You'll be able to buy hot dogs and hamburgers with liquor infused in them live on the stream when the show. And we have a famous grill master from Minnesota called the Pitmaster Pastor is going to be the host of the show. And it should be a real trip. So all of you, hopefully you get a chance, you can sit in on that. No charge to watch, but have your credit card ready because we want it to be a big success.
Put the link in Slack, please.
Say it again.
All right. It's boozedogs.com is the website. And the Facebook is facebook.com/boozedogs. And it's 8:30 tonight. Live streaming e-commerce. You can see how all that works. I want all of you all to do it because it's cool.
Hot dog eating contest just took out a whole new parameter there.
Yeah, exactly.
I'm not sure this sounds like a good idea, but
Yeah, you have to cook them before you eat them. That makes our show a little slower. All right, everybody. Thanks for tuning in, and we'll see you all next week. Okay, take care. I'm sorry.
Thanks.
See you tomorrow.
Tomorrow.
Thursday. Sorry, I'm in outer space. Thursday at 1 o'clock. Thanks a lot.
Thanks.
Bye.
Bye.
Bye bye.
Thank you.